Morning, everyone. Sorry for the 3-minute late start. Got a lot to cover here, and we may have a special guest from our community. I don't see him yet, but Chris Tarbert wanted to talk about CLFD earnings, so we'll get to him last if and when he shows up. Uh, all right, so wow, lots going on. Headline is I think this is a dead cat bounce. All right, on Facebook earnings, so you see the QQQ going up because of this big move in Facebook on the eve of Apple earnings. I personally didn't see anything uh, superb in the Facebook earnings. I think it was just a relief rally, oversold bounce. You can see this morning it's below the 50 DMA, below the 20 DMA. And I also think on the eve of Apple earnings, you're not going to see too many risk takers who want to go out and pay above these moving averages ahead of Apple earnings, which will definitely move the NASDAQ, and NASDAQ will move Facebook. So that's how I'm looking at it. So, yeah, as you know, all of you know my thesis on Apple. I do have some puts I bought yesterday. I'm going to buy more puts today. Honestly, I may even buy some Facebook puts today because I think this market may fade into the close. And you know what? If I'm wrong, I'm wrong. Mostly long is very small bets compared to the size of my portfolio. So we'll see what happens there. Look at this. RK is down though, even though Q and SPY is up. And that's because TeleDoc has gotten crushed on earnings, down 44%. It's now worth like 1/3 of the price they bought Livongo for. So this is pretty shocking for TeleDoc owners. I don't own any. But it's interesting because just 15 minutes before this report came out, we interviewed the CEO of DRIO Health, Erez Raphael. Sorry about all these connectivity issues. Got to figure that out one day. But there you have DRIO. We interviewed him, and he talked about some of the things which were actually plaguing TeleDoc. He didn't know they were plaguing TeleDoc, but they're talking about direct-to-consumer advertising. It's interesting. So if you go look, there's many TeleDoc stories here with different passages from the earnings report and the CC. But basically, the story here is, well, a few things. One of them was a big non-cash write-off because of the Livongo buyout. So I don't know how that should impact the stock or if it should. I'm not an accounting expert, but that's a big number there. But really, it looks like they reduced guidance. They're talking about reduced returns on advertising because of competition. And they talked about specifically chronic health management and mental health management, which DRIO is in that space, right? So they said, hey, there's a lot of competitors that are trying to get market share, and it's making our activities less profitable, advertising. So they talked about that, and they also talked about insurance companies, employers taking a longer time to make decisions. Now, when we talked to DRIO, first of all, we had a private VIP Zoom event with DRIO Health CEO yesterday. This is not going up on YouTube. It's worth a listen. If you're a VIP, make sure to grab access to the recording. And I can tell you that Erez is talking about his long-term business plan and how they're shifting away from direct-to-consumer pretty quickly right now, pretty rapidly. Their business is switching to B2B, B2B2C. So that means they have less advertising costs. And we know that they've onboarded a ton of employers recently that's going to start hitting the top line in Q1. And they also got a large national insurer. I wonder if some of the trouble TeleDoc is having is because DRIO is doing well. But we'll see. I mean, I think conventional wisdom here is the whole sector is going to go down. DRIO hit a 52-week low already yesterday. You can see in pre-market here, DRIO is not impacted yet. This 527 doesn't mean anything. It's only 26 shares of volume. Okay, but at least it's not below 5. We'll see, but I think there's a good chance it will get taken down with TeleDoc. If it goes up, if you see DRIO up for some reason today, it's because people are rotating, right? A lot of money coming out of TeleDoc. Where else are you going to go if you want money and exposure in the digital health space? On Track is decimated and basically dead, down 99%. right? DRIO's now at this point the best performer from the high to the low, which is not saying much. It's down like 83% instead of down like 90% for Teladoc and 99% for On Track. But we'll have to see if money rotates into DRIO or it's a sector takedown. I think there's a good chance the sector will go down, and then you can get DRIO shares really cheap. But I really, really liked what I heard from the CEO yesterday. I continue to hold it. This is one stock I've just held. It's, I guess at this point, it's a long-term investment for me. I've held through the whole entire downturn. The highlight of this, and the reason we brought him on, is to confirm that they don't need to do any more dilutive financings to get the cash flow break even. And that's the big story there. And if they can avoid dilutive financings while they grow and get to cash flow break even, DRIO could end up being a multi-bagger for sure. So I'm holding on to that. Twitter had earnings this morning. It's interesting. I saw some data from Bloomberg that there's only a 33% chance, at least the experts, whoever they poll, I don't know how they get this data, but there's a 33% chance the deal closes, right? Which explains this move here from, low 50s to 48, and the deal's at 54. So we have to see what's going on there. Elon Musk has been a little bit risque here, posting some criticisms about Twitter, which is really not supposed to do per their agreement, which also risks the deal. And what's interesting here is yesterday morning or 2 days ago, he posted about Truth Social like 3 times, which brought DWAC back from the dead. It was here at 34, and now it's 48. I always have to say this caveat, DWAC is just so overvalued. This is trade, maybe combined with technicals, and that's not enough for me to trade it. I also need fundamentals, but I watch this because of the impact it has on CFVI, which is actually now doing pretty well. It's you can see CFVI has been going up the last few days, and it's not. I don't think it's just a sentiment move off of DWAC stock, but I think this is a sentiment move off of Elon's activities, right? And Elon coming in here and talking about free speech so much. And I personally think that if the deal closes, it's actually going to be a huge plus for Rumble and probably not so much for Truth Social, because Truth Social is a direct competitor in terms of the model with Twitter, whereas Rumble is a video site more like YouTube or TikTok. So I think I see a lot of synergies possibly. And not only that, but I think in a Twitter environment where there's less censorship, you can see Rumble thrive and grow organically in the Twitter ecosystem. So I don't know. I had no idea that Elon had his eyes on Truth Social. He downloaded the app, if you can see from the screenshot. So if he knows about Truth Social, he knows about Rumble. It's in the world. They're doing similar things, have similar ideas about neutrality when it comes to free speech. So I'm still holding Rumble CFVI through this, and it's getting possibly close to a breakout level here, which but I don't know how much the upside is. But you can see it was, let me see, it was right over here, the close 1187. If it closes above 1187, that's going to be like the highest close since this thing was close to 13 or so. So I'm just holding this, not trading, not taking any risk, not adding, not going overweight, not going to call options, not in an environment to do that, just holding my core shares. All right, we had a big disappointment here in BTU this morning. So Arch and BTU was on our radar the last couple days, and Arch did great, up from 132 to 175. And some of you may have gotten into the sympathy play, BTU, same space, a call, which also was doing well with Arch, but they had earnings this morning, and they're down because they took like a $300 million loss on hedging activities. I think that's the primary reason of the drop. So that's not cool, but I don't know much about this. The conference calls at 11 a.m. There's someone in our community, Polo, who's been monitoring this, and he'll tell us more. He thinks the second half of the year is going to be great, but you can see it's gapping down below the 50 DMA here. So that's definitely unfortunate for those of you who got into BTU because of Arch. There was a huge whale trade of put options yesterday, BTU. So someone knew, I guess. All right. I'm still in ARTW. I have not been thrilled with the performance here. I thought because of the Archer Daniels earnings, which I ADM the other day, and agriculture sector, I just thought it was due for a bounce. But we can see here, I was hoping for a move to about, hold on, let me go to this chart, the daily. Yeah, I was hoping for a move to about 370, 380, but instead, for now, it's going the other way, and the bottom at this point is like 270. So I don't know what's going to happen. You got to manage your risk. I'm not thrilled with this. I may be looking to uh, cut some off at the right prices, and no reason to panic, I don't think. Business is good. Record backlog. This dropped, and I guess it's for a legitimate reason. They can't fulfill that backlog. They don't have enough staff and some supply chain issues to fill this record backlog. So that's a problem for RW, and it's been reacting bad since that earnings report came out, even though they have record backlog. So that's a story with RW. SMSI earnings are coming out next week, and that's always a possible catalyst for pre-earnings run-up. But I'm not expecting anything material, top line or bottom line, or any kind of headline numbers, which would cause the stock to go up. It's just too early, right? So May 4th. So you could potentially see a earnings anticipation run into May 4th. But then if that happens, it might sell off on the headline number. So I don't think this is ready yet. We're not really going to see materially the revenue numbers come in for another quarter or so from all of the relationships with the tier ones that are kicking off. But maybe there's going to be awesome bullish commentary. Maybe they can guide. Can they guide? That would be great. Can give us specific numbers, maybe in the press release. That'll be something that takes the stock up, right? If they can guide and give us numbers in the press release for revenue this year or something like that. I doubt it, but it's possible. But anyway, I think that's why you're seeing the pop this morning after the close. And that's about it. We're continuing to monitor KODK. Unfortunately, this is going to be beholden to the QQQ. I will remind you, Apple earnings, if they miss, particularly I'm looking at the guidance. I'm not so worried about Q1 numbers, but I am worried about guidance. And the reason I want to hedge my portfolio a little bit here, not only with Apple puts, but I have been picking up some PSQ the last few days because I am hedging for the possibility that Apple misses. And if they miss, then you know what happens with the Qs. It's going to break 316 and it's going to go to new lows. So that's what I'm worried about. If they don't have like a huge miss, maybe we'll be fine. Maybe we'll have a relief rally or a DeadCat Bounce or a bear market rally for a few days or a week or so because the market is definitely really oversold at this time. And there's a lot of puts that need to be unwound. I get all that. But fundamentally, if Apple does guide lower, forget about it. You know, all the technicians and all the statisticians will be wrong, and the market can still barf much lower. That's my view on it. So I want to be hedged for that scenario. All right, guys. Thanks for tuning in. Have a great day. We'll see you next time.